Welcome to Trading Nation. I'm Mike Santoli. Stocks in rally mode on Wednesday. The major indexes on track to see their highest closes in around 4 weeks. Our next guest, though, sees possible trouble ahead, and it could affect everything from the overall market to big tech names, including Apple. Hedge fund manager Dan Niles is founding partner at Alpha One Capital, and he joins us here on the phone. Dan, good to talk to you. Interesting spot the market's in right here, right? I mean, we're up 10% from those nasty lows in December, still down double digits from the highs just a few months ago. I wonder if a lot of people are starting to think maybe the coast is clear. It's kind of a more stable market. But how do you think the year is going to play out?
Yeah, I mean, I think, Mike, this is going to be a really tough year for investors in the sense that, you know, what I've been calling a year of psychological and market whiplash. And what I mean by that is that you've got two very different scenarios that are presenting themselves. The first one is, you know, are we headed into a recession? If you look at what the market did in the fourth quarter, I put out a tweet on this under my handle at Daniel T. Niles, but I said, look, market's down 19.3%. At its lows to start off Q4, and there have been only 7 other times in history where it's been worse. 5 of those were the Great Depression, and one was when Lehman failed. And I didn't think it was that bad. So now, as you rightly said, the market's rallied a bunch. So where are we today? And I think the problem is that, you know, on the one hand, you have all the positives. You have high employment levels across the globe, rising wages, low commodity costs. And because of the sell-off in the market, you have reasonable PE ratios for the first time in over a year. And you've got the Fed finally saying, you know, we're going to be patient and watch to see how the economy evolves. So if you look at that and you say, well, it could be like 95, right? 1994, the Fed raised rates from 3 to 6%. Market went down 2%. And then in 95, when there was no recession, the market went up, you know, 34%. So those are the two sides. You have a recession where the market drops 50. You have, you know, avoid one where the market could be up 30%, and I think, you know, that's why, you know, I think there's going to be whiplash this year because I think you're going to see violent moves up and down all through the year.
Do you lean one way or the other in terms of how it ultimately gets resolved, or do you think we're just going to be kind of trapped between these two possibilities?
Yeah, I mean, I believe it or not, am more on the optimistic side, which is probably the first time in over a year, you know, I've felt that way. And because I think the big turning point for me was when the Fed came out, Chairman Powell on Friday of last week, and he said, we're going to be patient as we watch to see how the economy evolves. Yeah. And the reason is on December 19th, when they raised rates, he said, you know, the balance sheet's on automatic pilot. And so if you believe that, you know, all this stimulus had a positive impact, in other words, central banks, the ECB, Fed, Bank of Japan were buying $100 billion a month in assets in late 2017. That went to zero in late 18 and actually went to negative $20 billion when it started this year. You know, if all of a sudden that's not on automatic pilot, then that stimulus doesn't go ahead and whack the markets because these banks were buying everything from stocks, believe it or not, to bonds, which we obviously know.
Sure. Did want to get into some of the big names that might be in focus. I know you've been negative skeptical on Apple. That scenario has certainly played out. What about now? What about once Apple has reached these lows and they've kind of already confessed, so to speak?
Well, here's the thing. They kind of have confessed, but they kind of have not. If you look at what came out yesterday, which it's funny because nobody's really wanted to focus on this, but they sort of sent out an email, from what I can tell, where they went ahead and said, okay, these are the new segment breakdowns for services. So if you look at Apple, if you're bullish, you go, oh, well, services is immune to the fact that iPhone sales are you know, collapsing right now. And so when they pre-announced negatively, people looked at the numbers and they said, oh, well, they reported $10.8 billion in services revenues. And if you compare it to the only number we had at that time a year ago, you would say, oh, well, that's up, you know, 28% year over year. Well, I think yesterday they kind of put out a new set of, here's our segment breakdowns. And what you see is that the segment breakdown for services a year ago was, in fact, $9.1 billion, not the 8.5 we were all working off of. And what that means is services actually is growing 18% year over year, not the 28. And what I've been saying all along is the iPhone is what drives the services business with a lag. So if you're not selling as many phones, well, how are you going to sell Apple Care? How are you going to sell Apple Music? You know, that's the issue with Apple. So we own Amazon, by the way, and so there's a great quote by Jeff Bezos that, he said a few years ago, which is, some companies are trying to figure out ways to raise prices, and other companies are trying to figure out a way to lower prices. We're the second. Well, Apple's the first. And I think the problem is when you're trying to attack markets like India or China, where the average GDP per person is way lower, you can't sell a $1,000 phone to China where the average GDP per person is $10,000, or to India where it's $2,000, right? So this is going to get them with a lag, and until they come out and say, you know what, we're going to start shipping $200 to $300 phones, I think they're going to continue to lose market share, which ultimately will hit their services business. So I don't like Apple still.
I was going to say, taking everything you're saying, you're clearly not suggesting that these challenges are priced in at these levels.
No, I mean, the thing is the stocks never go straight down, right? So, you saw it with the market. The market went down 19% to start off Q4, one of the worst starts of a Q4 in history. Now we're in one of the best starts of a Q1 in history. So with Apple, is it going to surprise me if I see a bounce from here? Because, people go, oh, well, if we get a China deal, well, that'd be great for Apple, because Apple's saying that's what drove their business down, and it goes up. Yeah, that's great. In which case, I would say, yeah, you should be selling it, because these are not China issues. You're trying to sell a $1,000 phone into a market that can't take a $1,000 phone. And these issues have been going on for a year, and to try to say it's something different, I mean, people aren't just paying attention to the numbers. I mean, we talked about services, but the installed base, here's another stat for you. They said, our installed base grew 100 million units. That's installed base not of people, but of devices. Well, if you go back and you look at it, that means installed base grew 8%. A year ago, they said that installed base grew 30% over the past 2 years. So that's slowing down as well. This is not a name you want to own where things are getting better. They're getting worse.
Yep, definitely signs of maturity all over the place when it comes to Apple. Dan, we'll have to leave it there. Appreciate your time today, Dan Niles.
Thank you, Mike.
And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.